The moment of reckoning is coming. Hey everybody, you're watching Bull Boom Bear Bust, back with another dose of economic reality. My name is JJ. A lot of recent economic developments here to get into that could affect you and I, and we're going to see how we can play this out. It's always good to keep on top of this news here, folks, so we appreciate you joining in to stay on top of the financial economic picture. Let's go ahead and get started right here, folks. We've got an economy in the U.S. and most of the world as well that's propped up on borrowed money, and the money that comes out of the banking system is just created at the click of a mouse. So this should tell you that what we're seeing with inflation and the cost of living and the price levels could last much longer and even get much worse. That's the worst case scenario. Prices going higher, cost of living going higher. And later in this report, we're going to talk about how you can invest using this information and how you can try to make some money. Of course, we talk about that here all the time, something frequently talked about. It's a topic that I like to stay on top of as well. Not just keeping up with the news, but how to invest, how to benefit from this information here. But first, let's get into the news here. It's some recent events here. We've got the Moody's downgrade, the recent downgrade, right? There's been other downgrades before this. Even over 10 years ago, we had another downgrade. But this was the latest in the downgrade that are long overdue. The United States, we've been the world's largest debtor nation for many, many decades. The downgrade should have came 40, 50 years ago, as soon as we came off the gold standard in the early 70s. But of course, they had to create the illusion of economic strength, that the U.S. is the world's richest nation. Well, if you look at the ability to borrow money and create money, then yes, we are the world's richest nation. But if you look at the real picture of the average U.S. consumer, 70% of the U.S. consumers approximately living paycheck to paycheck, well, we're not the richest. In fact, we're somewhere in the middle, and you may be even surprised to see that we're even more on the side of in poverty. But our standard of living is still good because we have the ability to borrow money. So we don't look like we're in poverty. But when you look at the dead picture, most people are in poverty here. But let's go ahead and get into the other news here. The other news that's going to underpin, what we've been talking about here for a while. And higher prices coming, folks. Majority of U.S. companies say they will have to raise prices because of the tariffs. And that was about 54% of companies that were surveyed said they're going to have to raise prices. Now, we really haven't seen it yet. We actually saw a slowdown in inflation in our last report that we are able to see. That was the month of April. Of course, we'll see what this month brings. We're already more than halfway through the month of May, and just about a week and a half left in the month of May. We're going to see what happens. Those numbers will be coming out after the first week of June, so we'll see what happens in May. Do you expect another deceleration or slowdown in inflation, or do you think we're going to start seeing the effects of the tariffs? And do you think we're going to see an uptick in inflation? Please let me know what you think down in comments. I think it's going to be holding steady for this month. I think the uptick's actually going to start in June and then accelerate July, August into the fall. That's just my prediction here based on what we've seen in the past with inflationary things that have happened in the economy. But folks, one thing that I want us to focus on is what we were told for many, many months, even last year, even last summer, almost a year ago now. We heard that we were going to make America rich again with these tariffs. Does anyone think that it's going to make us rich again as consumers, the middle class, the working class? Are the average people, the average working person, going to see benefits of these tariffs? Do you think it's going to make the working people wealthy, or ultimately is it going to make a few people at the very top wealthy, right? For example, the companies that are paying these higher tariffs, are they going to pass along the price increases to the consumer? The answer would be yes. Are they going to take pay cuts? We're talking about the CEOs, the upper level executives, the top 10%. Are they going to take pay cuts? No. It's all going to be passed along to the consumer. Will the consumer get refund checks for the savings? The answer is no. I mean, I could be wrong. Let me know if I'm wrong about this. The answer is no. You're not going to get a refund check. And if you look at the debt's still climbing. The national debt is still climbing. We're still having to borrow money, even though we're being told we're saving billions and billions of dollars by charging these tariffs or adding on these costs to make the other countries pay that. Even if they do pay it, folks, you're not going to see the savings unless you're someone in a very special position. You're not going to see the cost of living come down. You're going to see the cost of living go up because you're paying for the tariffs. You're not going to see refund checks. And there's certain people that will actually make more money because they're going to use the excuse of the tariffs to charge higher prices. Remember the car prices and a lot of the other categories that this happened with back in 2020? We saw the profits increase with these companies because they used the excuse of the illness. They used the excuse of supply chain disruptions, rising costs of manufacturing, rising material and wages costs. They used those as the excuse to raise prices, but actually they raised them a lot more than they really needed to because we saw the profits jumped for many of the mega companies and billionaires basically raked in the cash. The wealth increase by the top 10% was record-breaking over the past 5 years, like nothing we've ever seen. So all these disruptions, in this case the tariffs, call them disruptions, but they're not disruptions for everybody. They're actually a wealth creator for the people in certain positions, for the powers that be, mostly the top 10%. But the economic pain is not just being felt here in the U.S. We see many other countries suffering terrible financial conditions. Of course, not the people at the top in these other countries either, but the working class, for the most part, is feeling most of the strain and stress. And in this case, look what's happening in China. China recently had to cut rates. And the way it's being reported here out of Reuters, China cuts key rates as aid the economy as trade war simmers. And what we've saw and what we've witnessed, what we've seen over the past few weeks is we've seen many people losing their jobs in China because of the slowdown in manufacturing, because of the slowdown, because of the tariffs. We've seen half-empty ships coming to the U.S. now. So a big slowdown in both ends, folks. And we see protests breaking out in over there in that country as well because people were just let go. They didn't get their pay. And it's a lot different in the U.S. In the U.S., you're pretty much going to get unemployment for several months and longer, depending on your state, if you get laid off or lose your job. In other countries, they don't have that benefit because, and some of them do, but some of them don't. And that's because they don't have the world reserve currency. They can't just create and borrow endless amounts of money to pay out all these benefits to people. So in the United States, even if you lose your job, a lot of times you're getting a soft landing or a parachute because you can stay in unemployment for a while. All right, moving on here, folks, to housing bubble, real estate. We have to talk about it nearly every episode because housing prices, home prices are one of the key things that people are tracking. It's the American dream. The American dream is to own a home, even though you don't really own it because if you don't pay your taxes, you're going to lose it. But the American dream, quote unquote, to own a home, well, it's not going to become very easy or much easier. Look what's happening here. We've got homes coming onto the market, and you can look at the home inventory, and you see it's not really climbing that much. Why is that? Well, that's because we've got build to rent happening here. Build to rent developers take over entire neighborhoods across the U.S. In other words, they're building it just for a company to own it and rent it out. It's not going to be even available for sale for the average person looking for a home, right? So when you see all this new construction or talk of new construction, it's a lot of rosy noise that's put out there, making people think there's going to be a lot of new construction coming on the market, that home prices are going to come down because of all this new inventory. Not the case, unfortunately. There's 100,000 homes right now being built just for the sake of renting it out. It's not even going to be available to consumers, the person looking to buy a home. 100,000 properties newly built are being developed across the U.S., coming on the heels of a banner year for the industry, which saw a record 39,000 single rental family homes completed, up more than 15% compared to 2023. So in other words, more of the new construction is not going to be even offered for sale for individuals that want to own a home. It's going to be build to rent. They want everybody renting, apparently. It seems like there's some very powerful people that just want people to rent their whole life, doesn't it? And we're also given the states that have the largest number of build to rent. And what do we see here? We see Arizona, we see Texas, We see Georgia and what's that? South Carolina. I apologize. No, Georgia. That's South Carolina right there. But the one that's actually on the map is North Carolina. I apologize. North Carolina. Build to rent, folks. That's the way things are tilting. And it doesn't make it easier for people to buy a home when you see this trend. So bottom line is a lot of people are still going to be stuck renting. So then you have the call for more affordable housing, income-based housing, rent-controlled, or what's called rent-stabilized housing is what they're looking at to try to help people. But look what's happening with even rent-stabilized apartments here. We've got a surge in people getting evicted, even in rent-stabilized apartments. Here's a recent one. Fourth-generation resident of rent-stabilized Manhattan apartment fights eviction. So now we have this surge in evictions, and it's not just normal homes or apartments. It's people in rent-controlled apartments. They're not even able to keep up with the cost of the rent, and they're seeing a surge in evictions as well. And remember, a few years ago, we were told this is going to fix the problem, that we're going to pause evictions, and this is the solution. Well, what happened after the eviction pauses ended? Kind of like the student loan pause. What happened after that ended? We saw a spike in delinquencies, and therefore you're also seeing a spike in evictions. Nothing was actually fixed. It was just a Band-Aid on a broken leg, folks. And that's why things continue to get more difficult for the average working person, working class. And to further underpin this point, it's being reported here, CNBC, as student loan delinquencies spike, borrowers are now risking spillover. In other words, you can't make your payments over here. Your credit drops now because it's being reported to the credit bureaus. Now this affects you in other areas because you can't get a loan, or you may get a loan, but the interest rate is going to be much higher for car loans, for everything else, because your credit score just tanked because these late payments are now being reported. So that's what they're referring to as the spillover, and it's only going to accelerate from here. In fact, it's just getting started. By the end of this year, it's going to be a bloodbath out there, folks.
Money could essentially be taken.
Well, we're talking about 5 million borrowers, or up to 10 million if the numbers continue to grow, of people who have defaulted, and that means you're late by 270 days on your payments. This impact could be significant for people. Some Fed data is saying that credit scores could drop by more than 150 points on average.
All right, people, moving on. We've got some interesting layoffs happening. The federal layoffs continue, but now we've got stories like this. HR manager at Meta, Facebook, Meta, who helped guide the layoff process. So in other words, someone that was in charge of layoffs at a very big company is getting laid off herself here. I was an HR manager at Meta who helped guide the layoff process. Now they cut my job. Also, more Meta layoffs, folks. The people working in virtual reality are now subject to layoffs. And what I'm thinking is they can just maybe put on their glasses and it'll be virtual reality. They can make it appear like they still have a job. Is that funny? Is that not funny? Virtual reality, make it appear like you have a job. Not funny, folks. I mean, that's a bad joke, but people, I feel bad for these people. I mean, you never know. You could get laid off. I could get laid off. And you just have to be ready for it. The problem is people base their lifestyle on what they're making today, and they take out as big of a loan as they can get to buy the nicest house, the nicest car typically, and you pretty much get as a big of a payment as you can afford monthly. But then if your monthly income drops, you're already stuck with that payment for 5 years, 6 years for a car, sometimes 7 years, 30 years for a home on a mortgage. So it's a very interesting time to see how this is going to play out here, folks. Moving on here, folks. Other cuts we're seeing. Food banks cut, and this just started a couple months ago with the budget cuts. And we haven't even seen the impact of this yet. It's about 1.4 million meals that have already been cut from people in need. The cuts come as food banks nationally struggle to meet growing hunger. Growing hunger in the United States. Ever since 2020, what do we hear? There's an economic recovery. We're recovering from the downturn. We're recovering from the health crisis shutdown. What's recovered? People are in more debt. more people living paycheck to paycheck. The number went up from like 68% to like 74% based on the last survey. More people going hungry. And now the programs to help these people, to feed these people, are cut. And we haven't even seen the impact of this yet. What's going to happen to people that can't get meals? They don't have the free meals anymore. Are they going to resort to taking food? Are we going to see a big uptick in shoplifting? All right, we haven't seen this play out yet, folks. These just started within the last couple months, and typically it takes a few months of a cut to really see the impact, the ripple effect. I think there has to be a big surge in people just stealing, because when they're starving, they're going to get the food somewhere, right? They're going to have to break in places and get it, unless there's something else that comes in the place of this, right? Maybe more farmers giving food to the food banks, but the farmers are struggling. They can't afford just to give out food for free. So maybe they'll just get paid from some new program that gets implemented. I'm not sure how it's all going to play out, folks, but there's going to have to be some major bandages and crutches, to keep this economy and to keep the people from imploding and going hungry in this case. All right, moving on here, folks. This is something I like to keep on top of, these recalls, because it can be very dangerous. 75,000 cases of eye care products just got recalled. So eye drops. If you suffer from allergies and have dry eyes, double check your medication. AvCare, a pharmaceutical manufacturer, just recalled tons of eye drop solution. So check your medicine cabinet, check your eye drops, because we don't want to be putting toxic stuff in our eyes here. And you might end up wearing a pair of these if you're not already. You don't want to mess up your eyes, folks. You want to keep your vision 20/20 if it is. Let's jump into this real quick, folks. I should have mentioned this earlier as we were talking about the housing bubble, home prices, and real estate. We've got home prices growing at the slowest pace in nearly 2 years. So we're only 1.4% year over year. Now keep in mind this is Redfin, which just focuses mainly on the metropolitan areas. When you look at the Fed data, prices are actually down significantly from the peak, over $20,000 off the median home price from compared to the peak. But this Redfin data, is significant. It shows us the lowest in a few years, right? We saw this negative in 2023, but here we are, folks. So slowdown in the housing market. Sales are still in the basement here. Let's bring up another chart. Existing home sales, you see as of April, 4.1 million, just under 4.2 million. So a big slowdown in that sector. And that's not going to pick up anytime soon, folks. Even if they drop mortgage rates, prices are still too high. The debt's just too much for most people. So stay on top of it, folks. Now, as far as benefiting from this, what do we do? Well, if you're concerned like I am, you're going to have small positions invested, because if and when the downturn comes, you want there to be money on the side to invest. I continue to look for investment opportunities. I'm continuing to accumulate silver. So if you want to know my strategy, that's my strategy. I still have stocks, but my position sizes are very small. That way I can have a little more cash in case there is a downturn. If there's not a downturn, if markets just keep getting pumped up because of the funny money that pumps up these markets, you're still going to make money because you still have some money in the markets, right? So either way, you're going to make money. Just depends on how much you're going to make and how risk tolerant you want to be, right? So that's my strategy. I mean, let me know down below if I'm on it or if I'm off it, or what you're on and what you're off, what your thought is on any of this, right? The housing market, the housing bubble, home prices, people going hungry, the benefits being cut, how's it going to affect people, and what's going to happen with the economy. Let me know down below. Like to hear from you as always, everybody. Keep stacking. Bye for now. Peace.